It is no longer buy right, sit tight at Motilal Oswal Mutual Fund. A new CEO, Prateek Agarwal, has joined and he's shaking things up. First, let's understand Motilal Oswal Mutual Fund's core philosophy. Their core philosophy is buying growth-oriented companies and running concentrated portfolios. So companies which have high earnings growth, even if they are pricier in valuations than the broader market, those are the kind of companies that the fund house goes for. This philosophy more formally is called the QGLP philosophy, which prioritizes quality, growth, but at the right price. And this philosophy, of course, the new CEO is keeping intact. So what is he changing? Two things. One is that there was a divergence of fund managers after the departure of the previous CEO, Ashish Somaiya. Each was doing his own thing, and this is something that the new CEO is going to streamline. He roughly intends to have a 65% allocation from the various schemes of the fund house to the core themes that they have identified, such as China Plus One, such as healthcare, etc. The remaining amount the fund manager can diverge from, apply their own understanding to, and there's also a certain percentage that they have to keep for market swings. So that's the first thing, a streamlining of fund managers, bringing all the horses into one track. The second change that he's making is to the very idea of buy right, sit tight, which he's replacing with acceptance of much higher churn. So churn is when you have a higher number of stocks being bought and sold and more frequently. So his idea is that if you have a stock that's, for example, run up massively and has become a large part of the portfolio, then the fresh investors entering the fund, they will not have the benefit of that growth. And so it would be wise to pare down the position. On the flip side, if some stock has dipped a huge 20-25%, again, that stock drags down the portfolio. It becomes the talking point in all investor conversations, notwithstanding the other stocks that are doing well. And so it is prudent to trim down these kind of big underperformers and quickly. So this is the other big change that the new CEO is bringing about. Will all of this work or not? If you see the performance in 2019, 2021 of the flagship FlexiCap fund, it lagged behind the category average. But in 23, there has been a bounce back. It has outperformed the category average. So the early results are promising. Only time will tell if the long-term results are also promising.